you've been thinking about buying a second home and you haven't done so yet, you need to pay attention to this interview because my guest may just give you the information that helps you change your mind. Hello and welcome. Today, I am so pleased to bring to you one of my friends and one of the mortgage brokers I like to work with, Derek Bobadilla with the Bobadilla Finance Team. Derek, thank you so much for joining me today. Before we jump into our actual topic today, I want to look over at another screen and I want to read some news that came across my desktop late last night. Okay,
all right.
just an excerpt from an article. All right. Yes. According to Joel Kahn, the Mortgage Brokers Association Vice President of Economic and Industry Forecasting, all mortgage rates continue to climb, but the 30-year fixed rate rose for the 5th consecutive week to its highest level since March of 2020. The trade group estimates that the average contract 30-year fixed rate mortgage for conforming loans increased from 3.64% to 3.72%. And for jumbo mortgage loans, rates went from 3.56%, rates went to 3.56% from 3.54% the week prior. When I read that, considering that just a little over a year ago, rates were below 2%, even on refis, I was like, oh my God, I need to talk to Derek. But since our topic today is about second home financing, I just want to let you know that I read that and I want to have you back for another segment to talk about purchasing for a primary.
Nice. Yes.
But okay, there's big news in the mortgage world about second home financing. There's a lot of chatter out there about that. I understand this is really time-sensitive information. So for anybody watching or listening to this on our podcast, today is February 1st, 2022, and that will give an idea as to the timeline and what I'm anticipating to be a little bit of urgency when it comes to the second home finance process. So with that, Derek, I'm going to go ahead and I'm going to make you the host on Zoom for those of you watching. And you have the con. Thank you so much, Derek. Take it away.
All right. Thank you, guys. Thank you, Theresa, for having me here. It's always a pleasure to work with you. You're so amazing at what you do. I really enjoy working with you every step of the process. So let's just jump right in real quick. So right now, can you see my screen here?
Yes, we can see it.
All right, so you see where it says Fannie Mae announces loan level price adjustments?
Yes, we do.
All right, awesome. So just wanted to let you know that this news came out on January 5th, which was a big shocker. And we have a lot of things that are happening right now with this. So they're making it to where loans purchased from the loan investors. So like we have a bunch of different banks that we deal with. So each bank has their own time to sell the loan and to transfer it to Fannie Mae. That's your timing. So even though you see April 1st, you can't wait till that because that is the deadline for them to turn in these loans in order for us not to have these adjustments. So what I wanted to do was show you the adjustments that are upcoming. So on January 5th, they had these adjustments. And so right here, it's coming out April 1st. So since we're a mortgage broker, we get to work with a variety of different banks. So we've already had some insight from other banks saying one of their banks, most of them are at already going to be at March 1st or at March 15th that the loans have to fund so that they can actually take your loan, package it, securitize it, and send it off to Fannie Mae to get purchased by Fannie Mae so that the investor can get paid. And that's how it works. But what we want to do is we want to take a look at this here. This is for a second home. Now, the big thing is it's for second home and high balance loans. So we're in a county right now. We're in San Bernardino County. I'm located in Lake Arrowhead, just like Theresa's in the Lake Arrowhead area. And we don't really do high balance loans. So this is like Orange County, LA County, Ventura County, some other counties, Santa Barbara County, stuff like that, where we have all these counties that you can do high balance loans in, but we're not going to be really talking about that. We're going to be talking about our local market. So right here, the second home, there's an adjustment. So these are actually these equate to points. So points for an interest rate. So if today you're looking at an interest rate and it's 3.5%, which they're still around 3.5%. The Mortgage Brokers Association shows 3.72, but we're offering still 3.5, 3.625 in today's market, very comfortably, because we can shop it around. So we have investors that are offering that. So if you're looking at 3.5% on 0 points today, well, guess what? On March 15th to March 23rd, somewhere around there, you're going to be looking at, if you're putting down 40%, now you're going to be paying 1.125 points. And 1 point equals 1% of the loan amount. So if you're doing a loan amount of $400,000, that equates to $4,000. So in this scenario, you'd be paying over $4,000 for the same rate you'd be paying at 0 points today. So now you have an increase in costs. Now let's talk about if you wanted to put down only 10% on a second home. Well, look at this. 10% on a second home, you're looking at 4.125 points costs. So by law, you can't be charged more than 3% fees, according to the federal law, in total 3% fees. So you can't buy down the interest rate and do certain things. They won't let you. It'll be considered high costs. So what'll happen is your rate now will increase. So you're going to increase your rate to cover those costs. And that's the real issue too. So today we're at 3.5, 3.625. So if you wanted to be at 0 points on at 10% down, you might be looking at 4.25 to 4.5% in rate. So it's huge.
That's a big adjustment.
That is a big adjustment in rate.
Mm-hmm.
So the good thing is, so far I have not seen them making any more adjustments to investment properties. So what I've been doing the whole time for clients, because they often came to me and said, hey, Derek, we want to buy a second home, but we also want to rent it out Airbnb. Well, there's tax laws and there's actually occupancy laws against that. So you can only do a certain amount of days to keep it as a second home because it's a secondary primary residence. And so what I was doing, I was literally diverting them to going to investment properties because I wanted to make sure we weren't committing fraud. We were doing the right thing for the client and they were still accomplishing their goal. And they looked at their tax advantages with their CPA, financial advisors, and they go, man, well, I mean, that means I can do some repairs and do it legitimately because I think I'm going to rent it out for more than 14 days for this year. Well, great. Well, let's do it as an investment property. Already take the hit and we do it right. And that's the whole point, is doing things right from the start, getting to know whoever you're using for your loan. Make sure you just ask questions, and hopefully it's someone that you can trust or someone that you can actually sort of fill out and understand what they're looking for as a client, your needs individually.
So would it be correct, and I'm just going to jump in with a couple questions.
Okay.
Because these are the questions that are coming my way from my clients, and then also questions I'm formulating on my own. So if you can answer them, great. If you got to defer. Okay. So first of all, are we done with the screen share?
Yeah, we're done with the sheets. You can have it up if you want, or whatever you want to do. It's up to you.
Yeah, let's just go ahead and let's have a chat about this particular situation. Yeah. Okay. So one of the questions that's been formulating in my mind is that if the loan has to be repackaged and sold off by April 1st, that means that there's got to be a cutoff date. Like, what is the cutoff date for us to close escrow on a second home before we start looking at having additional costs or perhaps even a higher interest rate? Mm-hmm. Somebody who's in escrow today, let's say somebody opens an escrow today, it's February 1st, 2022. Right. What's our D day to close by so that they don't fall under this change? So
it's, for safely speaking right now, I have probably 4 to 7 investors that are saying a drop dead date that it has to fund by is March 15th. We have a couple of preferred investors that are more efficient. They're better equipped to be able to handle it. They might be coming out with guidance on March 20th, March 21st. They're going to still leave themselves with some time, but we don't want to play with that. So I would say March 15th is a conservative date that you have to have the loan funded by. So it has to be closed. So pretty much funds have to be in, escrow is going to be, so in the county of San Bernardino, they allow for same day recording. So what happens is you could fund and record the same day, but I'm not sure. It's March 15th. I think that's a business day, right? What do you think? March 15th is on a Tuesday. So we don't have any recording issues. So you have to want to fund and record that same day. So the loan funds and we're good to go.
So the goal actually to be safe, because things can happen at the last possible moment, as you know.
Yes.
I would think, conservatively speaking, even though March 15th is the D-Day, I want to put it to like that prior Thursday or that prior Friday, just to build in some comfort room so everybody's not hyperventilating as we tick down on this.
Yeah, so that's March 11th. So March 11th, 2022, that would be your comfortable D-Day. That's, hey, we want to just get this done, because we don't want to take a chance that clients have to bring in more money at closing, because it's going to be a valid change in circumstance.
Okay.
Because we know about it. So they're going to be paying more money to the closing table. And if you're looking at putting only 20% down, that equates to 3.375 in points. Holy moly. So you actually now have to reset everything up, requalify, redraw docs if you already had docs, because now you have a higher interest rate because you can't pass that cost on.
Okay, so you say you can't pass that cost on. Does that mean that we can't finance that into the loan itself?
You can with the higher interest rate. So they would have to now requalify. Yes, it's a trade-off. So that's how things get worked out. It's either you pay a higher interest rate with lower costs, or you pay a lower interest rate with more costs.
Okay, so let me wrap my head around this, because the conforming loan limit for San Bernardino County is what number again?
$647,200.
Okay, so that's a comfortable price point in terms of where the Lake Arrowhead market is right now. But I think, you know, because you watch all of our statistics really carefully on the mountain, we're seeing prices go up and up and up and up. And the things that were even $600,000 6 months ago, you can't touch for 600. You're now looking at anywhere from 750 to 850 to make that leap. So at that point, we're off conforming. We're at a higher price point. Once you go past conforming, do the same rules apply for this interest rate versus cost thing, or are we talking a completely different product?
We're talking 100% different product, because in the county of San Bernardino in Lake Arrowhead, there is no high balance. So people are used to, if you have a, let's say you have a Los Angeles loan officer, they're used to being able to quote high balance. Oh, we'll just go high balance. Now it goes from a regular conforming loan into a jumbo loan. So jumbo loans have more regulations. They also have, which we do jumbo loans, but they also have more regulations, more red tape, more qualification standards, and so on and so forth. There's a lot of things that go into a jumbo loan.
Okay. Another question that comes to mind for me is, you touched on it really briefly, so let's hit on it just a little bit more.
Okay.
I have some clients, all they want to do is have a second home. They don't like the idea of somebody else being in their property, sleeping in their bed, that's going to be just for them, just for their family. They're never going to rent it out. And then I also have the clients who look at it and they say, I want to buy a second home, and I want to then use it as a short-term rental to help defray some of the costs. You know, maybe it'll pay for itself. Okay. So when we're talking about products and the second home market, I think you said, and correct me if I'm wrong, if it's going to be truly a second home and you're not going to be renting it out, we're over here with the second home financing. But if they are going to use it, if they're even thinking in their head that they're going to use it as a rental to defray some of those costs and make some money off of it, we're going to a different product. But does that different product also fall under these rules?
No, because actually the loan level pricing adjustments for investment properties have not been changed potentially yet. So that would be an investment property. So if they plan on, or even have any inclination of renting it out. This is only for the first year, by the way, only for the first year. If they plan on renting it out for the very first year, because after the first year, you can't tell a client what to do. So they can buy an investment property today and then occupy it 1 year later, and they're fine. But so for the very first year, they can rent it out. If they want to rent it out for more than 14 days, they should go to an investment product, because then they're not playing with fire. Okay. So they're not playing with fraud. They're not playing, oh, did I do it wrong? Because, honestly, fraud's investigated by FBI. It's not a thing that we want to mess around with.
We don't want to do that.
Yes.
So I think that what we're getting to here with this conversation is, not only is there kind of a sense of urgency if you want to purchase a second home, and it's going to be a second home that you're going to use and you're not going to rent it out, you need to pull the trigger and get this thing done by March 15th. In my world, March 11th.
That's right.
So that you're not being hit by additional fees or interest rates, correct? But if you are thinking about using it as a short-term rental, really the proper way would be to do an investment loan.
That's correct.
Correct? Okay.
Yes.
And now I kind of want you to put on look into your crystal ball.
Okay.
Again, correct me if I'm wrong, but wasn't this supposed to actually take effect last year and it was put off? What happened?
What, the price, the rate hikes, or the price adjustments, or what are you looking?
Everything that we're talking about here for a second home, wasn't that supposed to be something that was put into effect and it got pushed off, or what?
No, we're talking, there was one of that was an appraisal delay. So there was some appraisal delays. It wasn't about these adjustments. And I was just listening to a great CEO of a company that really went into a little bit more on the inside of why they're doing these adjustments. Is what they're trying to do is they're trying to divert funds and probably put it into more of low-income housing and some other items. And so that's what they're probably looking to do, is take some funds from the second home clients, and they're trying to divert it into, other programs that they're trying to come down with the pipeline.
So there's always a reason. It's not just mystical. Hey, we're just going to drop this on you for the fun of it. There's a reason. Right. There's a method to this madness.
There was one of those products that did happen, but it went away, which was a 0.5 point fee for every loan that they did. It went away with that.
Okay.
So, but that one just went into the mystery pot, and I think they collected too much money and they weren't using it appropriately. But that's another story.
So I am going to, like I said, I'm going to ask you to gaze into your crystal ball. Okay. All right. And this is kind of like a lead into why we also need to do another segment just about primary purchases.
Okay.
Well, I started this with talking about the rate hike that we just saw. Okay. Those increases. I just spent about a week with some of the top resort second home agents across the United States, Canada, and Mexico. And the thing that kept being pretty much presented to us is that rates are going to continue to climb. And some were even suggesting that the rates are actually going to, within the next 2 years, go above 5. And I'm sitting there, there's gasps in the room. Oh my God, 5%. Mm-hmm. Well, when I started in this business back a long, long time ago, everybody was happy. They were like, oh, I can get a 17% interest rate, sign, right? So for me, from my background, I remember when people were purchasing homes and their interest rates were 17%. To me, 5% is still good, but money's different today. What do you think? Where would you project based on your knowledge of the market? Are we going to have small incremental increases? If assume nothing changes, politically, economically, COVID related, all of it. Is it time for us to see mortgage rates start actually creeping up? Not doing this, but just coming up. What do you think?
Yeah, I'm going to give you a couple of insights because I follow professionals. So I follow smarter people than myself. So that's how I learned. So, that's what I'm doing. Obviously, you went to a conference, you're educating yourself, you're investing in yourself, you're investing in your business, and also you're educating your clients to the best of your ability, which is amazing because not a lot of agents do that. They just fly by the seat of their pants, and you're actually taking action, which I'm very appreciative of that.
Thank you.
So what I'm looking forward to is, when I started 22 years ago, we were looking at 8.5 interest rates, 7.5 to 9.5, actually. That was the range. Okay. So now as rates keep on decreasing, that was the biggest thing. Now, what I talked to is, so I've been to a couple of items, as I've talked to many people. We are looking at interest rates, according to the MBS, going up to maybe 4.5%. So a quarter percent each quarter. So that's not including if we have any war, we don't have anything that is life altering. Now, one of the things that they're not telling you is, on a historical basis, when I follow numbers and I follow people that share numbers with me, is we are at inflation numbers that we haven't seen since the 80s, and it's been on a chart. So as inflation goes up, right, it's bound to go back down. And once we hit that top, then it goes back down. So rates could drop after that inflation time. So we're looking at potentially 18 months to 2 years, and then a potential rate drop. And these are from other professionals that they explain why they think it's going to happen, how they think it's going to happen, and what the method behind it. If you're looking at historical data, that's where we're at. We were in the rates, in the low threes and the mid twos. And next thing you know, it's like, wow, who would have forecasted that? So there was no historical data on that. Now we have that. So what I'm thinking is 18 months to 2 years. I don't think we're going to hit the fives. I think we're going to still stay in the mid-range fours tops. But could it happen that we hit the fives? Yes, it could. Could it happen that we have that we need to offset inflation? That's what the Fed is looking to do. Right now, it's already built into the market. So right now, if you're looking at something, you have to be careful and you have to be cautious when you're looking and playing the market on mortgage rates, because, man, there is big swings, big moves. You've already seen it probably last 2 weeks in the market. Boom, you have like, wow, your portfolio is up to 1 million. Now it's down to 800,000. You're like, wow, that market downturn really just affected us.
Wow. Yeah, there's so much knowledge that goes behind everything that affects us in the housing market. And that is why I like to team up with professionals, like you said, that are smarter than me, because I am the realtor, but this is why I send people to my mortgage professionals and the people that I partner with. So I just want to say thank you so much for being one of my valued partners, Derek. I appreciate you so much. For anyone who wants more information, how would they reach out to you? How would they contact you?
So you can find me, you can Google me, Derek Bobadilla Finance Team Home Loans. And so you can find me there. You can also call in the office. We have people answering the phone 7 days a week, actually. So, if I'm not available, I'm with a client, or I'm helping out with an open house, or whatever the case may be, or I'm with family, I have staff that are answering the phones, taking information, and we try to pride ourselves not having a voicemail. And that phone number is 909-270-4647. The phone number again is 909-270-4647. And my email is a long one. It's derek@bobadillafinanceteam.com. So you can send an email to us and we can reach out and help you out with your strategy of how you want to buy a house, what you want to do, if you want to buy an investment property, anything that you're looking to do. We can help you out. And we're licensed also in multiple states. We're in already 32 states. We're going to be going to 44 this year. So we're going to be across the nation.
Excellent. So bottom line is, even though you're located here in Lake Arrowhead, California, and you're covering the mountain, obviously, I see you doing loan products. I watch you on Instagram, so I know exactly when you're closing deals.
Yeah.
But be sure to get me a list of all the states that you are licensed in, because I think it's also important for people to know that we have the connections to make things happen if they're moving out of California, right? Or if
Yes.
they want to reallocate part of their portfolio, if they want to do something in another state, we have the ability to take care of that. So be sure
Yeah.
to get me that list, and I'll make sure that it goes into the comments and also gets added into the notes for the podcast.
Yeah, make sure you reach out to Theresa if you're looking to move out of state and you want real estate help. She has a lot of real estate connections. Obviously, she went to that conference, so she already knows so many people that she's connected with that are like-minded and professional, just like she is, that she can help you get that connection without having to do all the guesswork, and she can do all the legwork for you.
And by the way, he's right. I do have people. My
So,
people have people. We take care of everybody who wants to come
yes.
talk to us.
Yes.
Well, again, thank you so much for joining me today, Derek. This is really timely information. We're going to get it out as quickly as possible to everyone in our sphere and then some. Thank you so much. We're going to have you come back another time and talk about primary home purchases.
Yes.
And maybe every month or so, just have you come back and talk to us about what is the mortgage market doing. I would love to do that.
Awesome. Well,
Okay.
thank you so much.
All right. Thank you again, everyone, for joining us. Again, I'm your realtor, Theresa Grant, and real estate is my passion. And I'm going to leave you with one of my favorite new quotes, which is, interested people watch obsessed people change the world. We're kind of obsessed about what we do around here, so
Yes.
watch us go. All right, that's it.
Exactly.
And bye for now. Thank you so much, and we'll see you next time.
All right. Thank you, Theresa.